All right. Good evening, everybody. Hopefully everybody can hear me loud and clear. I repositioned my mic, so um, hey, what's up, Yankee? Um, yeah, hopefully everybody can hear it loud and clear. We're gonna get started. Um, I haven't taught in a while, so feeling a little rusty, but we'll get through it. Um, I'm pretty sure I've told everybody this is gonna be a longer class. Hey, what's up, Wiz? Um, and yeah, open to questions. So if something comes up as we're going through this, don't hesitate to ask. Um, and we're probably looking at right about an hour and a half to a 2 hour long class. So get ready for it. First, I just want to start really, really basic because this is important. Everybody has to understand market structure. Um, so um, this should not be anything that nobody doesn't understand, but just in case, here we're making higher high, higher low, higher high, higher low, higher high, higher low. And then, so this is an uptrend, and and then at the top here we have consolidation, and then downtrend where we're making lower lows and lower highs, lower lows, lower highs, lower lows. Right. So everybody should be good on that. Um, Next, we're going to get into POCs, what they are, why they're important, and how they work. So for average person, if you're using TradingView, you want to be on the 30-minute time frame. You want to have, extended hours. You want to have off. I'm looking at futures, so I won't have them off for this. But so in general, you want to be on the 30-minute time frame, extended trading hours turned off, and you're going to go to your indicators and look for SVP or session volume profile. One thing of note is we're not going to be using the HD version. We want to use the non-HD version. Once you have that, you're going to go into the settings for it. Your value area volume, you want to be set to 68. Row size, you want to be set to 100. And you will want to extend your value area. Or sorry, you don't have to extend them, but you want to have them turned on. So value area high, value area low, POC, you want to check all of these. You'll be able to, you don't have to like note down these settings. You'll be able to rewatch this video at any time. Sorry, I'm just reading in the Discord here. So value area high, value area low, you want to make sure you have both of those turned on. And I'll cover what that is in a minute. But so basically, if we zoom in on one day here, let's pick this one here. And let's turn off these candles. So this whole area, red and blue, is going to be my volume profile. Volume profile is basically all of the volume buying and selling that's traded at a given price. Whereas our volume on the bottom is volume over time. So this is volume over price. This is volume over time. Hopefully that makes sense to everybody. This one here, we can see exactly where, buyers and sellers are showing up based on the price of the given stock. So like here we have what is called a volume shelf. So we know we have an area where there's buyers and sellers here. And in this instance, I know that sellers won, or people taking puts won, shorts won, and the stock price went down. We didn't have enough buyers that felt like there was value on ES at this price. So we ended up losing and coming down. So that's a really quick overview of the volume profile. And we're going to get really in depth with this, but there's a lot of things that we want to be looking at. So again, this whole area is going to be the volume profile. This highlighted area is called the value area. And that's going to be based on our settings, where 68% of the trading volume took place on any given day, if we're using the session volume profile. So each one of these represents one day. So this is where 68% of the volume took place on any given day. And then this red line is called the POC, which is the point of control. Point of control is where the highest volume of trading took place on any given day. The way that we want to look at POCs, let me zoom out here, try to find a good example. Crazy, there's just like no good example right now. Let me or yeah, no. This will work here. Let me do replay really quick and grab this POC here. So the way that I do POCs is, and I'll just say this right off the bat, just because I do it this way doesn't necessarily mean it's the correct way to do it, but this is what works for me in trading, so I'll share it with you guys, and maybe it'll work for you. So I like to label my POCs so I know when they happened. So this is 7, I already forgot, I think it's 727. 7-7. POC. And so this I haven't spoke about yet, but there's a distinction between the POC and the virgin POC. And what that is basically on a day where a POC is formed, so like today, or at this day we're looking at, because it's the largest area, or the area on the chart where the largest volume was traded, on the day that a POC is formed, it's going to get touched a lot. But once the day ends and the next day opens, as long as this line has not been touched again, it becomes a virgin point of control. Once price comes up and touches it, or comes down and touches it, it will no longer be a virgin point of control. At that point in time, you want to go in and change it to a regular POC. And it is pretty important because virgin points of control generally will always be retested, and they're about 10 times stronger than a POC. And so, you want to have that distinction on your chart, knowing that this is a POC. I mean, knowing that it's a virgin POC. And also just something this is actually like a perfect one to show. If we look at this POC here and the one after, there's like 1 point difference, I believe, or 2 points. So this POC here is at 39.0330, and this Virgin POC is at 39.05 and 52 cents. So it's just a couple dollars difference. So when that happens, I like to label this as a 2x POC. And then obviously, I can't have two Virgin POCs because for a POC to be on top of another day, it has to have been touched. So I know when I put 2x here, it means that I have a POC that's basically right next to my Virgin POC right after. And that just makes this an even stronger level. We have 2 days consecutively where the most trading took place, in this few dollar range right here. And so when we're looking at a Virgin POC like this, where it's formed and then the next day we actually gap down and leave this POC, you want to think about yourself as a trader. If you are buying shares, not if you're buying options, because with theta we have to, sell and stop out or whatever if we pick the wrong direction. But if we were buying shares here and price leaves, gaps down and goes away, most people, when price comes back, sorry, I don't know how long it takes for price to come back. I also don't want to miss it. You know what, let me just turn this off. And we'll replay. Sorry. Oh my gosh, this new mouse I got is like crushing my soul. The wheel on it is so sensitive. Like if I barely touch it, it does insane things. Okay. So let's replay to this candle here. So again, if you're thinking about yourself as a retail investor and you bought shares up here at 39.04, and then the very next day it gaps down and price goes away and just keeps going further and further down, to where you're down a few $100s in this trade. If you're being real with yourself, the next time price gets to this level, the average person is just going to sell, take their trade, break even, and what's up, Joneser? Oh, hey, what's up, One Eye Willie? Sorry, not ignoring you. So anyway, average trader, when we come back to this area, is going to sell to get out of that trade break even, which basically means when we get here, we have a large amount of sellers. And then what's going to happen in an area where we have a large amount of sellers? And also, you want to put like a range on this. I'll cover this a little bit more in depth later, but you want to grab a range where sellers are going to show up because, well, as you use POCs and VPOCs, and so like I said, this one's been touched now, so this becomes a POC. As you use them, you'll start to recognize that sometimes they actually do get touched like to a penny. But it's good to have a range most of the time where you're either going to be taking puts below or calls above. So there's actually a few things to note on this chart. Like I wouldn't be recommending taking calls above, because if you look, sellers were showing up here and we weren't able to come through. And this is a pretty strong, or actually it's called like a weak sellers, or a weak top, where we come up and we just fly away from it. If you come up and you see like a bunch of wicks touching it, the next time you come back to there, you'll probably break through. But when you see like, just one wick touch and then reject, or one wick touch from the top and bounce, the next time you come there, you're probably going to reject. So your risk to reward here, if you were to go long, is like 10 points, which isn't terrible, but I would not be thinking long in this area. This is going to be the retest of this, and you really want to be thinking short. And also, we know we have that virgin point of control here where a lot of sellers are going to be showing up. So if we fast forward a little bit, yeah, so there it is. This is our rejection. Sellers are showing up again. And we should see, a pretty good rejection down to where you get, a decent play from this level. If you played the POC like 3095, and then, yeah, this is a great move. This is like ideal setup where you have a strong top with a virgin point of control. You come back up here, since we have this strong top where it's just, well, 2 wicks, I guess, touched. We're expecting a good rejection at this level. And this is how you want to trade. This is bread and butter trading, being patient, waiting for the setups, and looking for these levels on your charts. And we'll definitely get into more of that later on in this video, but this is the kind of setups that you want to be looking for after the market's closed and you're going into the next trading day. You want to have these levels and you want to know where they are. So that's that. Let's reset and let's erase all the stuff that we drew. So far we've talked about our POC, our value area, volume profile. I haven't really gone into the volume shelves. We'll go into that in just a second here. These blue lines are important. So these are value area high. And what I'll generally do is every single day, basically, I draw these on my chart. And I'll label them, so P for previous day, and then value area low, and then P value area high. And these are important to know going into the next trading day. Essentially, if you open below the value area low and you cross back over into it, 80% chance you go from the value area low to the value area high. Same thing with the top. If you open above and cross back in, 80% chance that you're going to the far side as well. We always want to be aware of the POC because this is an area where we might see a rejection or a bounce. So if we're coming from the top, you want to look at where your POC is relative to your value area high and low. So let's say POC is like way up here. You wouldn't want to be taking the value area high with a chance of bouncing here at your POC. But in this instance, you would take the break of the POC and play puts from the POC down to the value area low. With the POC kind of in the middle here, you can take it from the top to the POC and expect a rejection or a bounce here. And if you don't get the bounce, then you get to play it to the other side. And then that applies for calls. Same thing. You can take it from here to the POC, expect a rejection. If you don't get a rejection, you get to play it to the other side. So hopefully that makes sense. This is a good volume profile to look at. But so we have different volume profile shapes. The main ones that we want to focus on. So this one here is considered a lowercase b. So you have your whatever, the top of the B here, and then the the bottom of the B down here. I don't even know what I'm trying to explain. I'm laughing at myself. But so I'm sure everybody can see this lowercase b here, right? Believe it or not, this here is also a lowercase b, or sometimes called like a long b. This one here is going to be a D-shaped volume profile. So it looks just like a capital letter D. And last but not least, we'll have to find some uptrend. Well, this here is a uppercase P. You could possibly even say that this is, I'm still going to call this a P. We do have some volume here. Some people might argue that this is a B, but you want your volume really to be down here and up here. This is going to be a P. But here's a better example of a P where we don't have very much volume at all here. And then up here we have, like our uppercase P, right? And then this here would be an uppercase B, which isn't really very important, but basically you just play from the bottom to the top and the top to the bottom. So that's that. On our volume profile, so I turned off the candles a while ago. I didn't memorize what happened here, but I know we opened up here somewhere and traded in this area. Like basically just looking at the volume profile, I have a pretty good idea of what happened in this trading day. I do remember this day, so I know we opened like way up here, consolidated a tiny bit, and then just tanked. We're going to have a little bit of consolidation here, 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 and then down here. And so these areas on the volume profile are called volume shelves. And the way that I like to look at them is like rungs on a ladder or steps on a staircase. And basically anywhere that you have a shelf or anywhere that you have, anywhere that you have a shelf or a rung or a stair is an area that you can stand. So like if you're climbing up a ladder and there's no rung, you can't stand on free space. You have to have something to stand on. But as long as there's a rung there, there's something to support us, and so we can hang out there. We have some smaller ones in here, but I'm not gonna mark those ones. They're gonna be pretty insignificant. But so basically, again, you want to look at this as stairs on a staircase or rungs on a ladder. If I'm standing here, I can go from here to here, but I can't go from here to here. There's nothing here to support me. This area here is called a skinny belly. This is a better example of a skinny belly where there's really just no volume between. So when price leaves this area, it's going to move quickly from here to here. Or if it leaves from the bottom, it's going to move quickly from the bottom to the top. Same thing here. If we leave here down, it's going to move quickly. If we leave to the top side, it's going to go quickly back up. There's nothing here to support it, nothing here to support it. So we'll move quickly from stair to stair. You can move from this stair to the next stair, this stair back down, this stair up to this stair up to this stair, so on and so forth. If we turn our candlesticks back on, so exactly what I said, we consolidated sideways a little bit here, kind of broke down a bit, went back up above, and then once we started going, it's just gone. 2 candles, so these are 30-minute candles, so basically an hour shot down. And then if we're looking at our previous day value area high, and this is not planned at all, but like I said, you should have this on your chart. And once we broke it, there is, you could possibly say, a little fake out here. But once we broke through this, like, we just flushed, right? And again, the POC is going to be like your first target. So technically, this negates that fake out. From here to here, I mean, on, futures, ES, this is 8-point move, give or take. That's good money, but your real risk to reward is playing the POC down to the value area low, where here you're getting a, this is 73 down to 57. I'm not good enough at math to do that on the fly. Sorry. But much better risk to reward here than here. And, you can use your this thing, your short position, to tell you, like, if you're entering, oh, sorry, I didn't mean to put it there, at the POC, your stop loss should be just above the value area high. I would even say bring it right up to this volume shelf here, which we could even argue is like, here is good enough for stop loss. And for your take profit, you're shooting for 2. So actually this is below the value area low, but I wouldn't hesitate to take profit at the value area low here. So that's your trade. And this would have ended up being a great trade. So, these volume shelves, if we were to go back in time, and replay, we didn't know about these shelves here, because none of this had played out. So we're cheating a little bit, but you want to use the volume shelves from before, and on higher time frames to find where buyers and sellers are showing up. I was just doing this to show an example of, how the volume shelves work on a given day. But even without this information, again, you can take short from the value area high of the previous day down to the POC, possibly play it all the way down to the value area low, or from the POC to the value area low. So that there is considered the 80% rule. I'm just going to check and see if anybody's got any questions. To people, sorry, bear with me for a second. To people in the Discord, if you do have a question, please at me, or you can try using the voice, but I'm using wireless headphones, so after 30 minutes of no sound, they turn off, and I'm not always going to be aware that they turned off, so if you try talking to me, I might not know. That's good to hear, Don. We're just barely getting started. It's going to get way more interesting. All right, so let's remove all the drawings again, and let's check out, like, I don't know, 4-hour chart. Actually, I might be getting ahead of myself. Let's go back. So, yeah, I was definitely getting ahead of myself. So, people in the Discord will probably know this, but for our B-shaped volume profiles, and this is, again, I'm just going to use this as an example, But generally, you're going to want to be looking at, actually, I'll just show you guys really quick, but we'll get into this more in a bit. You'll want to choose like a higher time frame, and you'll want to use what is called fixed range volume profile. And with fixed range volume profile, you're going to choose the low, like the lower low to the current high. And then this will show you where buyers are. And to find where the sellers are, you'll pick the high to the low. Okay. But so this is when we're looking at charts. Oh, somebody's asking me something. Sorry. I don't like this training chat, FYI. Okay. So the question is, oh, actually, it looks like there's two questions. I'm sorry, Duck. Why would I call today's VP? Looks like there's a lot of people talking. I was in the wrong chat. I don't know. You said this here. Why would you call today's VP at Catching Rockets? I don't understand what you're asking me. Oh, today's volume profile. I'm sorry. So anyway, we'll get back to this fixed range volume profile in a bit, but we want to look at the 30-minute. Oh, this looks like a P, but it's still, I mean, this one's forming since we're on futures. Yeah, we have a P forming here. This is a D. And shorting long, I turn off my extended trading hours. So I did cover this at the beginning of the video, but I'll go over it again really quickly. When I'm looking at, looking for my POCs, I'll be on 30-minute time frame and I will have extended hours turned off. No, you're good. I'm just saying you probably want to go back and rewatch the beginning of the video. I don't mind recovering stuff if people didn't understand something or have a question. That's not a big deal. But I'm just saying it was covered. But so when you're looking at your POCs, you always want to be on the 30-minute time frame with extended hours off. Unless you're looking at futures, then you want to have extended hours turned on. That would be like your, the difference. And then a little trick really quickly while I'm thinking about it. If if you look back, you generally only have about 30 days of volume profiles. Sometimes it's like a month and a half. But you won't be able to go back much further than that. A little trick that I do. So like, let's say I don't have any VPOCs below here because these candles, this area doesn't have volume profiles because it's too far back, like here. Like if I wanted to get some VPOCs from this range here, I would have to go back to this time frame. So you just hit the replay feature and then click on a candle, and then there's your POCs, VPOCs from further back. If you're not able to go back far enough on 30 minutes, then you can switch to like 1-day candles, and then you can go back even further in time to find VPOCs and POCs. But again, so they're showing up here, but you don't want to find your POCs on daily candles. You want to do replay to whatever range you're looking at. And then once you're here, you want to switch back to your 30-minute candles. Okay. So that's just a little tip. Like, you'd probably figure it out over time, but now you know it and should be helpful. So again, the people in the Discord will probably already know this. So for P-shaped volume profiles, and again, you're not going to do this on 1-day volume profile. You want to do this on fixed range volume profile further out. But you're going to be looking for high volume nodes, so areas where we have volume shelves, to take shorts. So let's just say here, and I'll show you guys another little trick I do. Like if I were to label this, it's really annoying, at least for me, because I have to keep moving this, every day for it to be at the edge of my chart. Like if I have this over here and, like I'm zoomed in, I can't see it basically. Once it gets like a few days back, it's going to be off my chart. So a little trick that I do for that is instead of labeling this, I just draw a line and make it the same color. And I'll label that. So now, no matter where I move my chart, that's always going to be on the right-hand side, based on my settings. But that's not, you guys can figure out your settings to get it on the right side or wherever it is your preference is. But so again, back to our volume profile here, where we have a B shape, we're going to look for a higher volume node above it. And we're going to look to take shorts there. So if price were to leave here and come up, we're looking for a rejection back down. And you could even, if you cross below the value area high, again, you can try to play the 80% rule down. I guess one key thing I didn't mention about the volume, about the 80% rule is price needs to actually leave, have candles closing above. It doesn't have to leave that far, but basically you want it to leave, so completely leave the value area and come back inside of it, and you would take puts here. Shorty recommends 3 candles closing inside of the value area before you would enter puts. I'm not familiar with the 84% rule. So yeah, you want 3 candles to close inside of the value area before you would take puts, or if you come outside of the bottom and back in, 3 candles to close before you would take calls to the upside. But so again, back to the lowercase b, when you leave the value area high, you're going to be looking for a rejection at the higher volume nodes and take the puts down. Okay, so that's how we play our B shapes. P shapes are going to be the exact opposite, the inverse. If we have a P shape, you want price to leave value area low, and then you would look for a high volume node to enter. And this is this is a better example of a P shape. Other than we would want a little bit more volume in this area, but we have a very distinct high volume node up here where we know we're probably going to get a good rejection when price, when we leave value area high and come up to here, we would expect a rejection back down. So far we've covered trading P shapes and lowercase b's. D shapes. I'm going to turn on my candles for this really quickly. For our D shapes, we want to take our fibs, and you're going to take the high to the low. I mean, actually, it doesn't really matter. You can take the low to the high or the high to the low. But what you're really looking for is the 50%. I'm going to turn my candles off again just so it's easier to see this. But so here's my 50% line. I know it's kind of hard to see. It's gray, but I know what it is. Let me actually turn off the volume profile really quickly. Now it's really clear. Okay. So our 50% fib here for D-shaped volume profiles, when price crosses above the 50%, you're going to take calls and play them up. And when price crosses below 50%, you're going to play it down. And so if we look at our candles again, so if you were to do this, and again, we're not going to do it on the day that it's occurring because we don't know. I mean, like you could, if this was our range here, from the open to the low, and you have a D-shaped profile, once you cross back up to the 50% here, you could take longs. Once you cross back below 50% here, you can take puts. But the actual total low of the day was over here somewhere. But so again, we would be looking at this on longer time frames, determining that we have a D shape, and then on the future days, sorry, Tavares, I'll answer that in just a second. On future days, when you see you're trading within that D-shaped range, you can use that 50%, to take calls above and take puts below. So let me just get rid of my fibs. Actually, I'll show my fib levels really quick for anybody that wants to replicate them. Based on what my mentor taught me, Shorty, these are the only fibs that you worry about. So that's that. And candles. Oh, I didn't mean to turn those off. I don't want that. Oh my gosh. Oh, I'm trying to turn on my candles through my indicators. That won't work. So, when we're in a downtrend, or actually, no, I'm sorry. If you look at blue is volume up and yellow is volume or down volume. So blue is buying, yellow is selling. Yeah, those fib numbers are killer. Sorry, let me just regain where I'm at. I'm pretty sure we've killed, or actually the only volume profile we haven't covered is a B shape. And you don't really see a ton of them. Oh, here's a B shape. Again, not on the day that it's happening, but on subsequent days. You're going to look to take calls above and then puts below, basically. It would have been, well, I don't want to say fake outs, but yeah, these are 10-point moves basically on ES, give or take. So these are good plays. Obviously a massive move here. So that's how you want to play B shapes. But again, I would find it, on a larger time frame where you're not looking at like days later after other profiles have happened. You want to find it on a larger time frame, like on a fixed ranged volume profile. Let's see what the current downtrend is. So we're going to take the high to the low. And right now it's a P shape. Let me just turn off our session volume profile. So, or sorry, I didn't mean to say a P. This is a lowercase b. And so you guys should know how to trade this. We're going to be looking for price to come back to like this level. Leave the value area high, come up here, and you would take shorts down. I'm going to take a quick water break here, guys. Just a couple seconds, but yeah. I think my mic was picking up me drinking. Sorry, I should have muted myself. All right, so anybody have any questions about volume profile, value area, or POCs, VPOCs? I rely on them very heavily, stonks. They're deadly. So like if we look at, I know right now I'm not really, I mean, you can, I haven't really gotten into it, but all of these you want to draw, you know, like a, well, this is not a VPOC anymore, but we will cover this in a second, but all of these you want to put like a box around. I don't, and I'm just guessing here, like I don't, you do this based on the volume profile. But let's just say this is our range. You would take puts below and calls above, and you know these levels get pretty darn accurate consistently. You know, like you'll see them where they get touched almost to a penny. So I rely on them pretty heavily, along with you know, value area high, value area low. And we'll get into it more, but I start looking at you know, also areas where you have, sorry, I'm trying to talk and delete this at the same time, and I can't. My mind is not functioning well. Why can't I just, there we go. Thank you. Sorry, let me get this off my chart. All right. What was I saying? Why am I having a total brain fart here? Oh, so, you know, I look at supply demand, but I draw supply and demand based on my POCs, my VPOCs. I also look for accumulation and distribution. I know we haven't talked about any of that stuff yet, but we will be getting into it. But I'm just trying to answer this question. Hey, Drew, you mentioned before that we should always keep an eye on VIX, add ES, NQ, SPX. Yes, I can, George. Well, so basically this is how mine looks. It's going to look squished on this screen because I use it on a, I guess it's a portrait mode 27-inch. So up here I have, and this also you can see, you know, like the amount of indicators I use. I have VWAP on here, and aside from that, I have POCs and VPOCs, and that's it. I don't use anything else. So this is ES. basically for ES, it doesn't really matter. Like you can watch ES or SPY. ES's levels tend to be better than SPY's levels, more accurate. You have more people trading futures than you do SPY. And so these levels tend to hit a bit harder. But if you're comfortable trading SPY and you like to watch SPY, you can watch SPY. You don't need to watch ES per se. I do watch it though, as well as I watch SPY. NQ, basically the same thing as ES. This is like our NASDAQ futures basically, or QQQ. So if you're trading QQQ, you want to watch NQ futures. For, I need to zoom this out here. Add is advancing and declining stocks. So basically how this works is anything over, why did I put a $sign? That's weird. Oh, I guess it did it automatically. Anything over 750, the market overall is bullish. Anything around 500, the market is going to be neutral. And below 0, the market is going to be bearish. And so like if you look at, here, like the high, it says 954 and the low here says 2064. What that means is 954 on this day, 954 stocks were trading higher than they were the day before. Or down here at the low, 2064 stocks were trading lower than they were the day before. So this is just like it's a breadth indicator of the market. It gives us an overall picture of what's happening in the market. So, you can see if the overall market is bullish or bearish or in a neutral area. You don't really want to look at it in like the sense of like here, we're negative 1022 and we start to see green. No, the market's not suddenly becoming bullish. We're just having some, like some stocks are starting to go closer to their previous day range. So, but we're still in bearish territory. So until, like in this instance, we crossed from bearish to neutral, but we're still not bullish. So that's how you want to look at add. And then VIX is just really essentially it's the inverse of SPY or ES or whatever. If VIX is going up, SPY is going down. If VIX is going down, SPY is going up. So basically, I watch ES on 3-minute, NQ on 3-minute, add on 3-minute, VIX on 3-minute, and then I also have ES on 30-minute and NQ on 30-minute. Higher time frames, just less noise, clearer picture of what's actually happening. So stonks on like if you use Thinkorswim, that's what we're looking at here. If you use Thinkorswim, you already know we're looking at Thinkorswim. But on Thinkorswim, it's $add. On other brokers, it'll probably be called something else. So, like if we were to go to TradingView, it's just going to be add. So you can see here it says NYSE advancing minus decelerating stocks. So advancing and declining. So on TradingView, it's just straight up add ADD. So, okay. You also have tick. This is a cumulative. This is like a real like market breadth indicator. There's other ones. I'm not going to dive too deep into this stuff, but I'll go back to ES here. Really quick, I'll just show you guys I would rather like show you guys like SPY, but I don't want to erase all my levels. And if we look at this, this is going to be the goal. Um, so if you're a newer trader, you're not going to come in, watch one video or one live class, and then become like an expert trader overnight. But if we start looking at the levels, like on SPY, for instance, if I zoom in here, um, my goal is to teach people how to find these levels by the end of the class. Um, and I'm guessing most people here probably know me. I'm a scalper. I'm not a swing trader. Um, I'm a day trader. I scalp. I'm in and out. Um, and so this is what we were talking about earlier, right? Our previous value area high. When we come to that, we're going to hop in puts, boom, down, and right to this potential bounce area where we did see a little bit of a bounce. And so this is my price target. If I take a short play from here, I'm looking to get out here. And when I enter a short play, I'm buying on a green candle, or in my case, I like blue and white, but so my white candles are green candles. Hopefully that's not confusing for anybody. But when you hear, I think this is important to mention because a lot of people will say it, but not a lot of people do it. And when you talk with like a pro trader, they'll be doing this stuff. Um, there's, sorry, um, the saying is like, buy the dip, sell the rip, right? Or you can also interpret sell the rip as like buying puts, um, and buying the dip, we're going to be buying calls, right? But so when you're buying or when you're selling the rip, you want to be buying puts into strength. So when you're on a green candle coming up to your short area where you're going to get in short, when you're on that candle is when you want to be buying your puts. You don't want to be waiting for red candles to get puts. Contracts are going to be cheaper when you have a green candle if you're buying puts. And if you wait for red candles, maybe it gives you a little bit of confirmation that you might see a reversal, but you're going to be paying more money for the contracts. And so over time, um, if you're buying, if you're taking puts into strength, you're going to pay less for the contracts. You're going to get better risk to reward. And then your price target where you're getting out. And then when we come back up again, boom, take puts down, and you keep playing your levels. Um, you'll notice I don't say like long here because we're in a downtrend. I'm not trying to play from this potential bounce up. I'm just looking for the puts down, puts down, puts down, so on and so forth. Um, so anyway, this is kind of the goal by the end of this live is for you guys to be able to find these levels the day before. So when the next day starts, you have clear defined levels on your chart and you don't deviate from that plan. As you can see by my chart, like this is literally what I look at. I have VWAP. I use a VWAP cloud. The band multipliers is 0.13. And for people that don't have access to my shorties VWAP, you can go into indicators, search for VWAP, and you just use this volume weighted average price. And when you use it, you're going to go into the settings. You're going to change the band multiplier to 0.13 and click OK. And now you'll notice the VWAP lines up exactly with mine. I'm going to remove it because I don't need to. This is literally what I look at when I'm trading. VWAP, volume, and session profile. I do like to have these zones on, which if you're not in Shorty's Discord, you won't have access to these. I'm not trying to show off stuff, but this just makes it easier to see where the higher lows are, higher lows, higher highs, lower lows, so on and so forth. So, we'll get into the A plus setups. Don't worry, stonks. That's coming up, but I need to explain everything before we get to the A plus setups. So, but basically, we're looking for retests of like accumulation or retest of distribution. And depending on your trading level, you'll know what that is. I got a couple questions, so let me just read really quick. All right, so Jelly, I just went over the VWAP clouds. How you choose your strike, I mean, it really depends on. Actually, that's not even something I want to get into right now in this class. I'll be happy to talk about it either individually or in another class. But it depends on if you're swing trading, if you're scalping. It depends on, like where you're at in the trading day. Like if you're buying 0 days till expiration and you have an hour left in the trading day, your strike price is going to be very different from the open of the trading day. When you have a full day ahead of you and you're buying 0 day till expiration compared to the last hour of a 0 day till expiration, or compared to like a swing trade, it's your strike prices are going to vary very drastically depending on where you're at in the day and how far out you're buying or what have you. So a little much to cover in this specific class here. And sorry, I know I don't have a mention. Never mind. I really don't like my new mouse. Really, really, really don't like it. This wheel is crazy. All right. So, and then one thing I didn't talk about on my volume down here, I have, how do I zoom in better on volume? There we go. This blue line is going to be a moving average. Length is 20. Just basically at a glance, I can see like, is volume above, the previous 20 days or not, whatever. So just helpful at a glance to see how volume's looking. While I'm thinking about it really quick, I want to just recommend some books. Well, actually, everything's going to be in the description of this video, but there's some that is funny, Matt. There are some books that are really important to read. We're going to be looking at snippets of some of them today, but basically, like, you want to pay attention to volume. See, I just moved my mouse and the wheel's making this zoom in and out. Like, it's crazy. It's so sensitive. I don't like it. So here's a good example. Or at least I think it is. It's not the greatest example, but we're going to call it good enough. If we look at volume here, I mean, this blue volume is trending down, right? And then the white volume is kind of flat. So that means as you see this volume trending down, this is going to be a bullish volume anomaly. So we have, sorry, actually, let me clean up the chart really quick so it's easier to see. These two candles, and they're big candles, but our volume is trending downwards, which just basically means we're probably going to end up seeing a reversal like we do here. So when you see you know, like a lot of white candles, but your volume is going inverse to your candles, that's going to be a bearish volume anomaly where you're probably going to see a reversal, and you'll start going the other direction. So this is important to look at, like as we're coming to, you know, like a key level, we see that volume's trending down, and we're looking. I mean, I know in this instance, I'm not looking to take calls here, but if I were, and I see these strong blue candles like coming down or strong red candles, yeah, it's divergence. And I see that my volume is trending down. I that just gives me more confluence that this is probably going to be a good area to enter a long position, and so I can have more confidence, you know, buying my calls on a red candle that I'm probably going to see a bounce there. And where you really will learn about this is, let me just pull it up on the screen really quick. Sorry, I should have prepared this, but I was kind of busy. So this book here, A Complete Guide to Volume Price Analysis by Anna Cooling. This is like #1 book that you should read for trading. Like if you don't understand volume, you're not going to be able to trade. Jelly, my settings on the higher highs, higher lows, all of that is just the default settings. And then another book that's a must read. So Trader Dale, basically, if you find value in what we're talking about today so far, volume profile, POCs, value area high, value area low, this book is an absolute must, and it's inexpensive. I don't think I have this one linked in the video, but here I'll throw a link here and I'll pin it. It's an inexpensive book, so I would recommend like supporting this author and buying the book. But this book is phenomenal, and it's going to cover what I've been talking about so far, but way more in depth than we'll be getting into in this video. This book will take your trading to another level. And another must read, in my opinion, is going to be Secrets of a Pivot Boss. This one's very expensive. You can find it on eBay for like $16 to $18. Another book that's just insane, killer book. I will say the average person, you'll probably just want to read like the first few chapters where it's talking about types of buyers, types of sellers, and the types of trading days. So for people in Keenan's Discord, I was talking about types of trading days a little bit today. This book covers types of trading days really in depth. And yeah, Don, that is a very good point. So Trader Dale, he has his own website. I don't remember. Yeah, here it is. So trader-dale.com. There's a lot of good information here as well. So Secrets of a Pivot Boss. So like I said, the first few chapters are going to talk about the types of buyers and sellers and the different types of trading days. You want to learn the different types of trading days, and you want to be able to recognize as early as possible what type of day we're in. So like if we were to look at today, today ended up being a extended typical day. So typical meaning we opened where Yeah, what am I doing? Yeah, opened here, um, came down, up, and we were kind of just in this range for a bit. Um, and then here it became an extended typical day where we dipped down out of that range, back into it, and then back down below, and then even lower. So this is the extended part of the typical day. I know I'm not explaining this very in depth. This I don't have enough time, to get into like the different types of days. This video would just get insanely long, but you do want to learn them. Secrets of a Pivot Boss covers it really well in the first few chapters. If you get into the later chapters, it does start to get kind of confusing. But actually, let me take it off of this chart because I have so many lines on my chart here. We'll go back to ES. And if you look at, so this indicator here is a great one for Pivot Boss. I personally don't use it, but it gives you your areas to get in and out of trades. As you can tell, like I don't use it. I have an idea of how to use it, but basically I would have to use like the replay feature to see today's. It goes based on the previous day. And basically it wouldn't have given us an entry. Or wait, I think some of the stuff is black and it doesn't show. Yeah, here we go. So you want this on. Black's not going to show up in my chart, obviously. And somewhere in here is like something called CPR. Yeah, turn on CPR. Anyway, there's tons of settings, as you can see. But yeah, so there you go. This gives us some entries. So right here, it's saying sell reversal. And you can see like it hit almost to a T. This is where you would be buying puts. It's saying sell because it's expecting a reversal here, but you would be taking puts down. And then same thing, when you come back up to this level, you grab puts down. These levels, you're either looking for a bounce or a rejection down. Anyway, I'm not going to get into this too much, but Secrets of a Pivot Boss, great book. First couple of chapters cover the type of days, which in my opinion is what's important. If you want to try, trading based on it, this is a great indicator for it. I like naked charts with very minimal stuff on it. So like I said, VWAP, volume, and session volume profile pretty much covers what I look at. And so we've covered a lot so far. And this is basically straight out of Trader Dale's book on volume profile. This is how you want to trade. So Stonks asked, oh, awesome. Stonks just bought that book, but that's cool. But again, this is literally straight out of Trader Dale's book. You're looking for, like in this instance, we're looking for a short position. You're finding an area of support, which once you break below is going to become resistance. So, and again, this is like, we have multiple touches, so breaking through is pretty obvious, but we're not wanting to take the break of the level down. You want to take the retest of the level down, and there's several reasons that we want to do that. The break of the initial break of the level down, we don't know where buyers are going to show up. And so we don't know, like if we take a put here, it could reverse like a point later and go back up, and we don't know. But if we wait for this support level to become resistance, then we know when this rejects here, we knew buyers showed up before right here. and that's going to be our price target to get out of the trade. Okay. Inverse for calls. So multiple touches. So like this, where you start seeing a lot of wicks touching a level, you're going to expect it to break through. When price leaves it and comes back up, pretty good chance you're going to slice right through this level. But so right now we did have 4 rejections, so this is a strong resistance level. We crossed through it, and then when we come back down and retest it, this is our entry here, because we know where our sellers showed up. So that's going to be our price target up there. I have a DM. Has nothing to do with this chat. I mean, nothing to do with this live, but all right. So again, these are straight out of Trader Dale's volume profile book. Highly suggested that people buy it. I don't earn commission from it or anything, but it's good, and that's why I'm recommending it. So here, I mean, this is a very small one, but this is a small distribution phase where we have basically more. Oh shoot, I just thought of something. We're going to go back to volume profile for a second after I cover this, but basically we have a very small distribution phase here, which is basically just let's just say I'm going to end up copying shorting. I don't want to, but I'm not going to be able to think of anything else. If you have like millions of oranges you need to sell and you're trying to sell them here, but there's not enough demand to buy up all of the oranges, you know, price is going to start falling on those oranges because there's not enough buyers. And so this area here is distribution where people are, you know, like sellers are getting out of their position, they're selling, we don't have buyers showing up, and then finally price comes down. So this here, you know, buyers showed up here and push price back up to this small distribution phase, and this is where we would take a short position down. Same thing, your price target's going to generally be where buyers showed up before, but you know, in most cases we're going to be happy with you know, a decent move and take profits and get out of the trade. And so, you know, these are great examples, and we'll show like how to find these on the chart. And then this is one shared literally straight from Shorty. We have accumulation where, you know, like market makers or retail are buying up stocks, and then it starts ripping. And then the distribution phase where people start selling, and then we push the market back down. And as you can see, like you have your initial breakout, and then you have the retest, and then it flies. Same thing here, initial little breakout, retest, bigger move. The second test is also generally the bigger move on levels when you enter. So sorry, we're going to go back to our volume profile really quick because I realized I completely forgot to cover something important, which is that accumulation phase. So we'll just use this area here. So this here is going to be a POC, and we're going to label it. You want to get in the habit of that. And it's a virgin point of control, or I think it is. Let me zoom in really quick. Yes, it's a virgin point of control. So again, let me just cover that. When the POC is being formed, price can touch it as much as it wants. during after hours and pre-market, price can touch it as much as it wants. When the next day opens, if price touches it, this becomes a POC versus the virgin point of control. So the way that we look at these, and unfortunately this is not the best example. Let me actually go back to here. So let's say a market maker, well, ES, whatever. Let's just pretend this is Apple. Market maker hedge fund is like, oh, we want $3 million worth of Apple stock. And so they start buying, right here at this POC. Let's say they get a partial fill for 1.5 million and then price takes off. Price comes down briefly back to that level. So market makers don't chase price. So when the stock price leaves this area, they just leave their order there because they know they're going to end up getting filled eventually. So partial fill for 150 million, price leaves, they get filled for another 500,000. Price leaves. I'm just going to pretend that this didn't happen. And then price here comes back down to this, below this POC, and the rest of their $300 million order for Apple gets filled here. So from here, price rips. Market makers are happy. Hedge funds happy. And they know, like if we were to come back, replay, I don't know, back to here. They know about these levels. So I'm not going to start labeling all of these, but you understand these are POCs. So the next time, they get their shares filled, $300 million worth, price rips up, and they're selling through here. Or they see that buyers are showing up and they don't sell. I don't know. But, they're going to buy low, sell high. Maybe they sold up here. If we go back further in time, I don't know. Let me get off of 30-minute time frame. Oh yeah, here we go. So I'm sure market makers would like this level much better for selling. Just at a glance, we have a lot of selling here, right? So I'm not going to go and find all the POCs. Let me just erase these ones though. But there's POCs here. Actually, let's grab at least one. Oh, you're not going to let me do it. Dirty. Well, I guarantee you there's POCs here. I'm sure there's one right about here. Okay. So market makers down here at these POCs, they get filled on their $300 million worth of Apple, over several days. Price rips. They know that sellers are showing up here based on, the sellers here. So that's a great place for them to get out of their trade. So when price comes to this level, you can see this is going to be our distribution phase. So on that picture I showed, let me just pull it back up really quick. Here's our distribution phase, right? Here's our distribution phase. And we're looking for that retest, right? So, and again, this is not planned, but this happens, over and over again in the market all the time. I I'm not trying to draw like a perfect, but I don't know, something like this. So here's our distribution phase where sellers are showing up. Market makers, over several days are offloading those $300 million worth of Apple, um, and price starts to go down. And then, the cycle starts over again. And again, you want to look for that retest. I mean, the initial move will pay you, but actually, I think I kind of grabbed this level perfectly with this wick here. Um, accidentally though. But so, we break through this level, we get the retest, boom, this is where you want to hop in puts down. Yeah, you're good, Jelly. It'll be there. So, um, this is, distribution accumulation on a live chart versus that picture. And so these are the levels, that we want to start looking for when we're making plans on trades. This is not accurate. I'm just grabbing random whatever. But when you're looking close to where price is trading, you want to start identifying key levels, on different time frames, on higher time frames. You always want to zoom out. 12-month is a little drastic, but 12-month, if you want to get like a big picture of the market, all the way, back to 1998. But generally, the furthest out I go is 1 month, because you might find, like if we look at Amazon, you might find a zone like this where we have a major distribution phase. And if we count this, this is, we'll say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 months of distribution here on Amazon. And then once it did break, these are good moves every time that it broke. And then finally, we get the big move. And then what do you see here? This is our retest, right? So this would have been where you want to buy puts, longer term puts on Amazon when it came back to this level here, and play it down. Obviously, this takes a lot of patience and knowing that this is there, and watching Amazon every day, knowing this level's here, waiting for this to happen, over the course of, just too long, 551 days. And then waiting for this retest to happen. But we can do this on the smaller time frames as well. And that's really the goal, is you want to find this on the smaller time frames, look for those retests, and play those bigger moves. Patience is so key in trading. Like for me, we'll go back to ES. Not that ES. Sorry, I'm just trying to remember where I was. So actually not ES. We'll look at SPY. And my point of looking at SPY is I have my plan. The night before, every single night, I know exactly what trades I'm looking at the next day. And if none of my levels get hit, that literally just means I'm not taking a trade. That's the level of patience that you want to have in trading, is if your plan that you predetermined beforehand, and this is going to apply to people that are like anywhere from like a beginner trader to like a profitable trader, you want to have a set plan the night before and you want to follow it to a T. If the setup doesn't happen, you just don't trade. Obviously, like you want to chart multiple tickers, so you have options. I'm sure between these four tickers, my plan is going to play out somewhere. So rare for me to not have a day where I just don't trade at all. But I'm really waiting for my levels to get touched before I'm going to enter a trade. I also generally don't trade like the first 10 to 30 minutes of the market. The initial move of the day is generally going to be a fake move. And the IV is really high. So you're paying inflated prices for contracts, and it's just not a good idea. Once you become like a pro trader, like on shorties level, you don't have to follow a plan. You start to recognize where pivots are going to happen, where rejections and bounces are going to happen, and you can do all this stuff on the fly. But if you're like me, you want to have a predetermined plan and you want to play it out. Like you want to follow it to a T the next day. You don't want to be FOMOing. You don't want to be chasing. Like if this came to my level and I missed grabbing puts, I'm not going to grab puts here in open space. I'll just wait for it to come back and I'll grab puts when it comes back again. If it doesn't happen, I'm not taking the trade. Oh, dynamite. Sorry, just one time. You're just looking for one retest. So that's it. I've got a few DMs, so let me just check them really quick. I want to make sure I'm not missing questions. None of these had anything to do with the video or the live. Sorry. I really don't want to miss questions, but also sorry about the dead air time. And I know this is going to be, a longer video. We're already at an hour and a half, so let's buckle down and really get into this. We're going to look at ES. We're going to skip this day. I'm going to turn off the candles. I tried not to really look at them because I want to do like an honest, overview of how I would trade today. Why do I only see one day? That's just weird. What do I have? How am I going to do the replay feature if I can't see? Oh, there we go. That was really weird. Oh, this is happening now. So we'll go back so we have a full day. I'm going to replay to here. Or I'm not. Wow, so funky. All right, let me turn my candles back on. No idea what's going on. All right. So on this day, we have a lowercase b. We know exactly how to trade these on, subsequent days. We're going to be looking for our, the retest of this high volume node up here. So we would be looking to grab puts here. I'm probably going to erase this. I'm just going over this. I don't think we come back to this level on today. But just a little bit of review on how to trade the lowercase b. So we need to make sure we have, our value area high and low. Sorry, and I'm like so OCD about colors. That way I can, I know what things are at a glance without really reading my labels too much. And then since this formed today, we know that this is going to be a virgin point of control. So we would label this so these are really I'm not going to be labeling other stuff too extensively because it's just going to take up time that we don't really have. I want to try to knock out the rest of this video. It should go pretty quick from here. But so like I was saying, you want to zoom out, right? From here, you know, we know that we're in a downtrend. We've made a lower low, and now we've made a lower high, right? Or you could even say lower low, lower high, lower low, lower high. So we're trending down. No problem. I'm trying to figure out how to say your name. Elmani, I think. So zoom out, get an overall, you know, idea of what's happening. Recognize we've got, I mean, actually, I don't even want to do it on the monthly. From here, I'll look at the weekly chart. And then from this, I generally just go to the 1 day. 1 day is where I'll really start like looking more at charting things. And so let me just turn off some stuff. I don't need this right now. You know, just to help make the chart look cleaner. We're trading right in this range here. I know futures dumped, so we're like 39.32 right now. So it's actually like down here. But so actually that's a good, you know, thing. Like if you look here, we're at 39.32, I said. Or no, sorry, 39.33. This is like probably a good area to be looking for a bounce. So if you look, yeah, right around here, you know, this is on higher time frame. We're looking at daily. So when price came through here, you know, so this is what we've been talking about here. It's resistance, probably became support, then became resistance, resistance, support, support, you know, turns into resistance, whatever, blah, blah, blah. Turned into support again here. And we'll probably be looking for a bounce right around this level, which is exactly what happened. If you look at futures right now, let me see where we actually bounced. We bounced at 39.24-ish. Yeah, 39.24.25. So where's 39.24? Yeah, that's a little bit lower. Anyway, you get the idea. We would be looking to go from puts to calls here, or exit our put position at this level, roughly. But this isn't going to be relevant for the chart we're looking at here, but we're in a major, well, we're in a decent sized sell-off right now. So on the daily, you want to look, you know, where we're, you know, like what's happening here. So we have like a double top here. You're going to want to exit your puts there. And this is actually, so like a tweezer and then a double top. Then you can see like this level is weak, right? If we're looking at the daily, we have a lot of wicks here at this level. So when we come back to retest this level, we expect it to just flush right through, which is exactly what's happening right now. Um, I'm just trying to see if there's any other like really key levels. Um, yeah, so here we essentially have like another double top right there, which is right where we bounced on this day. From here, you know, you want to start going down to like lower time frames, 1 hour or 1 hour, 65 minutes, time frames like that. So we're looking at this range here, and we're really looking where you know, we have like support and resistance. It's never going to be perfect, um, but we're just looking for, you know, touch, basically a touch. Uh, this here wick through it, but it acted as support for a second there. Um, touch here, touch. You know, quite a few here. And back to what we were talking about, you know, with like the week level. Um, this is actually called like a failed auction where you have a bunch of touches at a level, and then we leave and come back, and the next time we come here, we just slice right through it, right? Um, so we knew this was like a weak level because of all of the touches. And when you go down to like lower time frames, you know, whatever 3 minute, wherever you're trading, um, you want to be paying attention to those touches. Like if you come to a level, for instance, if I thought this was a good level to enter short, and I notice all of these wicks touching, the next time I come back to here, I'm not even thinking about taking a short position, because I'm probably going to end up slicing through it because I have a failed auction here. This is a weak position, or it became a weak level. Okay. Um, so basically, again, we just want to go through and try to identify, um, you know, levels where we have support and resistance. I like this one here. Um, and right now you're probably like, for people that are newer, you might be like, oh God, like how do I find, you know, these levels? He's just drawing random lines. And um, your key things you're going to want to be looking at is going to be your POCs, value area high and low. Right here, you can see I took this whole doji candle and made that a range because I've got touches here. Boom, 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 touch, boom, boom, boom. And so basically every time we've come to this level, in this range here, we've seen a bounce. So this is going to be a nice area to take calls. Or if we break below, you know, this area is going to become resistance, and then we would take puts from, you know, the initial break we're not going to take. We're going to look for the retest, right? That's what we've been learning so far today. So if this happened to break here and comes down, you know, whatever, blah, 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 retests here, this is where we would take puts. And then we know, you know, our level where we're wanting to get out of the trade is here where the buyers showed up, right? So that's how you want to look at those. We're always looking for that retest. Boom. You know, this first one here, we didn't know. Second one here, we knew. This is where sellers started showing up. So this retest would have been great. Same thing here, retest here. We play it right back up to where sellers showed up again. So those are the levels, you know, how to find them at least. And then again, you really want to be grabbing your POCs. So we'll go I like to also look at 65-minute. And the reason 65-minute is the market, the only way you can divide the market evenly, trading hours, is on 65-minute time frame. The market divides by 7 into 65. So you might find some stronger levels on the 65-minute just because everything's rounded. So I like to look at that as well. And again, I'm just kind of like going through this really quickly because this video has been already getting close to being a lot longer than I anticipated. And I'm sure people are probably getting tired. So I want to try to get through this. It actually might even be a good idea to make this into a, like second half video. So in this range, here we have a VPOC. I'm not going to label it. Well, I'll put VPOC so we know it's a VPOC. I'm not going to grab the date. When you have an area like this where you have like 4, 1, 2, 3, 4, I just want to check the price range. 75 down to 63. So yeah, basically 10 points, 12 points range where we have a bunch of POCs. You really kind of want to just not take trades in this area. You can take trades below into, but as you can see here, it's just choppy, choppy, choppy when we get into this area. So you're wanting to take, again, the retest of these levels that we know up, retest up. And this is something here that market makers will do. Like, if you trade with Shorty, you'll hear him saying, I'm going to grab calls here, right? And we haven't quite come to the level. And that's because sometimes market makers will do a little Duke move and not take it all the way to the level. That way, people will miss the trade. So Shorty will buy before you get to a zone, or like before you get to like a key level. He'll actually buy before. And he also has like big old brass cojones. So like he wouldn't stop out until like somewhere over here. Whereas my portfolio can't handle that risk. His can. But so he'll hop in early before it actually gets to the zone. Me personally, as a trader, I wait for it to hit my level, before I hop in. I wait for it to get to the zone or to the level, and then I'll hop in. If I miss this trade because it came a little bit short, so what? I missed the trade. It's not a big deal. I don't get tired. That's funny. Okay. So, so now we have POCs, VPOCs in this level, in this range. We have some, support and resistance through here. Since we've talked about, like the P-shaped volume profiles, P-shaped and B-shapes are going to be the strongest volume profiles. On those ones, it's generally a good idea to grab like the highest volume node around that, as your range for entering or exiting positions. I personally don't do this, but it's not a bad idea to do. This is a POC. All right. So we're going to just be saying, whoa. And I'm sorry, everybody. I know it's getting long, but we're getting close to being done here. All right, I'm gonna stop labeling stuff. Basically, every one of these lines is somewhere where I would consider taking a short position. Um, but I'm also kind of rushing through. You really want to be looking for the retests, and I know I've emphasized that like 500 times, but that's really the plays that you want to be taking. When do I start removing lines? That's a really good question. Thank you for bringing that up, Don. So on POCs, they become invalid basically after about 30 days. But virgin POCs, I'll leave on my chart pretty much indefinitely. My chart is a mess, but the lines still work. If the lines are working, leave them on. Yeah, make sure you lock your lines. But one cool thing with with TradingView that I love is if you accidentally move a line, you can move it right back with one click. So that's nice. So anyway, we have, this is how you want your chart to look going into the next day. Why is this line like wrong? Where we have a clear defined plan. And if that plan doesn't play out, we're not taking any trades. So you guys already know for value area high, well, in a downtrend, if I did gap above, which I highly doubt would happen, but if I happen to, of course, I'll be happy to play my 80% rule from the value area high down to the POC. And if I don't get a bounce at the POC, then I'll try to play it to the far side, which, I have levels here where I would be expecting bounces to happen as well. Like this white line, I'm expecting a bounce there. This green zone, I'm expecting a bounce in there as well. But so in this case, the value area low,
going to be investing whatever
well, I
we
don't know
make
about what's going to happen
invest into the
when
channel,
we
and that's exactly
turn
what
off the
I'm
replay feature and look at the next day. But
channel. A little bit of
again,
like
if I gapped up, I would
you,
happily
so
take,
figure out you guys along with. We gotta run to
and
the
re-enter the
parts.
value area high. I'll happily take
Count for
puts
this,
down to the
this folder.
POC.
Dan,
If
the
I don't get
cap
a
off
bounce at the
the
POC, I'll try to play it down to this white
this.
line. If I
And
don't
it
get a bounce
does.
there,
So
I'll try to play it
he
down
was
to my green
basically looking
box
for
and then
that
ultimately
channel.
to
So the
my
radiator
value
should
area
be
low.
on the parts. Oh, I'm gonna
And
get
if
like
we
a
were in an
sleeve.
uptrend,
Carlos,
I would do the
could
same. Well,
you
I mean, you
mute
don't
your
actually
phone?
have to be in an uptrend, but I don't really like to take calls in downtrends, but you can if you gap below your value area low and come back inside. You can play the 80% rule to the other side. Someone's mic is on. Can't
Yeah,
hear.
it's Carlos. Mute.
I don't have any feedback or anything like that. I don't think. My headphones, I think, were off. I'm not sure. Let me play a sound really quick and see. Okay, my
Can you
headphones
hear
are.
me?
Oh, Angel is talking. What's up, brother?
No, it was. I was saying the same thing. Somebody's mic was on, and I couldn't hear you very well. Just at the end there. That's all.
Okay. I'll just recap what I was just saying. In a downtrend, I really like to take puts and not take calls. But so, if we gap above, or I'm sorry, if we open above the value area high and cross below, I'll happily take puts down. I'm going to look at each level for a potential bounce to exit my trade. So my VPOC, this support/resistance line we drew, way back, green box, and then ultimately the value area low. I'm not really a fan of taking calls, except for like trending days. I'm sorry, on typical days, I will take calls, from the bottom to the top and puts from the top to the bottom. But when we're in a downtrend like we are right now, I'm not really big on playing calls, but basically you can find plenty of puts to play that you don't need to play calls. But if you have like a higher adversity to risk, do your thing. But if you were to open below the value area low and cross back inside, you can play the 80% rule. Same thing's going to apply. In this instance, if we cross to the value area here, I mean, I'm good with, 5 to 7 points on ES. So I would take this, but your better move is going to be waiting for this support / resistance to be broken and play the 80% rule from here to the POC. That's going to be the bigger move. Or see if you don't get a rejection here, play it to the far side. So anyway, with all of that said, we'll turn off the replay feature. We'll look at today's trading day and just see, based on our plan that we have, where we would have took trades, and just try to be as honest as possible. If there's a fake out that happens, we'll see it and we'll call it out, so let's turn this off. So here's our new day, right? Again, I'm not looking at calls. So we open inside of the previous day's value area. We come up above. And here you could play the 80% rule if you want to. Up to you. I would take puts right here at the value area low of the previous day. 100% I would hop in puts here. Our volume, sorry, I think the volume here is this after hours? Yeah, no, I wouldn't be taking puts here. Oh, sorry. I'm on 30 minutes. I'm like, what is going on? Alrighty, this is more like it. Today, here. All right. So, I'm on Pacific time, so this is the first candle of the day here. We opened above the previous day's value area high. You could have grabbed puts here. I would not. Me personally, like I said, I don't trade the first like 10 to 30 minutes of the market, but this is a good short entry. And you can see we come right down to the POC, right? So we have a clear defined entry and we have a clear defined take profit. And this line here is irrelevant. This is our current day's forming value area high. And, like if we replay to here, that line's not going to be there. So it's going to, move based on whatever's happening during the day. So basically I'm saying ignore this upper blue line. But if you took a short position here, you're looking for 2-1 risk to reward. And this stuff is important. So here's our entry. Obviously you would be drawing this after it happens, but while you're still in the trade. So for 2-1, gosh, your stop losses. And it's actually good. It's above the top of this wick here, if you can see that. So if we entered here, we could come back up and form a double top right where that wick is, and you wouldn't want to stop out there. You want to stop out a little bit above it. This ends up being, perfect trade. Again, this is not planned. I didn't look at this. You guys saw me turn off the candles. None of this is planned. But we have, this is our VPOC. Almost to a penny, we tap it. If you took the short entry here, and again, like I'm not going to lie to you guys, I would not take this trade simply because I don't trade the first 10 minutes. And this happened in the first, this is the opening candle. like boom, right away. You could have hopped in puts, but again, not my jam. Shorty did take puts here. He called it out on our Discord. I heard him call it out. I still didn't take it. It's not how I like to trade. And again, so with the POC here, if you're good with, taking calls on downtrends, this here is a great entry for calls. A bounce from the POC, and your price target is going to be. Sorry, let me remove this because it's really getting in my way. Your price target is going to be your previous value area high. And since you just blast through it, you might have been able to get a little bit more profit. Like hopefully you would get out on this wick, because after that, we wick down pretty good before we take off more. And then again, we come back down to the value area high, right? This would be our entry here. What time is this? 7 o'clock. So this is exactly 30 minutes after open. I would take this trade. And now we're going to start talking about something important. We're going to draw our short position back on our chart, but I want to have it out of my way. So I'm going to make it small. So this is going to be super important. We wanted to go a little bit above this wick. I'm going too far. There we go. 2-to-1 risk reward. So we're doing the same trade here, 2-to-1. We came down, blah, blah, blah. Like you could have took profits at any time. And we actually end up crossing above our original entry, but we haven't hit our stop loss. There's two ways that you can do this trade. Personally, I'll tell you which one I would do, which is once a trade is green for me, like significantly green. So this is a pretty good move on ES. I wouldn't blame you if you took profits here and didn't wait for the full move. But then you're going to be that person when the full move happens going, oh, I left so much money on the table. If I just stayed in, blah, blah, blah. I would have made so much more. And you'll be that person. But either way, like this ends up being a good trade. You're making money. You should be happy. It starts to get, scary and hairy here. But you do end up getting the full move down to your POC, right? And just for clarity, on this day, this becomes a regular POC because we have touch. Just one touch is all it takes, but we have multiple touches. So the importance of our stop loss here, what you should be doing 100% of the time, and I'm going to be the first person to admit I do not do this 100% of the time, but you should. So this is kind of like your parents telling you, like do what I say, not what I do. I would recommend doing what I say and not what I do, but I wouldn't blame you for doing what I do. You really want to honor your stop loss and your take profit. The reason being, if you're using 2-to-1 risk to reward, our ratio here is 2. So we're risking 1 to get 2. If you do that consistently, and let's say you're a bad trader. So a bad trader would be like a coin flip where 50% of the time you're going to be correct. If you're a bad trader and you do this 50% of the time, you get stopped out, at a risk of 1, and you take profit for a risk of 2, 50% of the time, you're going to make a ton of money. You could do this 34% of the time and you would still be profitable. If you were like just the most unlucky person in the world and you were only correct 33% of the time, taking 2-to-1 risk to reward, that's where you would be a loser. But that's not going to happen. So this is the do what I say thing. You should always honor your stop loss or your profit taking, not one or the other. And then what I do is, let's say I took this put here and it came down and I'm like way in the money. I put a stop loss just above break even. So some people trade on brokers where you don't have fees. I trade on TOS where there are fees. My fees round trip is $1.10. So 55 cents on each side. So I'll generally put a stop loss like right at $4 above my entry or $2 above my entry. That way, I'm never letting a green trade go red. But you can't do that early. So like, let's just say for ease sake, I enter a SPY play and I paid $1 for the contract and it goes to $1.06. I can't put a stop loss at $1.02. I'm going to get stopped out. I need to give it room to run. Ultimately, again, 2-to-1 risk to reward. You figure out where you need to stop out for your risk or for your loss and where you need to take profits for your taking profit, and you let it run. If you go like, significantly green and you don't want to go red, you can do what I do and put that stop loss, a few dollars above or whatever. But really, you should always honor the 2-to-1 risk to reward. You should always, enter at your level and exit at your level. Okay. Done preaching. So again, great trade. I would have took this one. And then same thing here when price comes back up. Well, actually, same thing here. If I got out of this trade, I would enter again here and play it down. Same thing here, 100%. I would take puts here. And again, my stop loss, I'm just going to draw it so it's a little bit easier to see. I'll make it red. That is not red. So my stop loss is up here. I would be entering at my level. Like I told you guys earlier, you want to be buying on the green candle. So as price is moving up, you want to be buying here and then play it down. And this is going to be where you're taking profits, right? That was a funky circle. Once this level breaks, we can hop in puts again. I can't put a circle over a circle, but so yeah, and then here's our profit taking again. And so every single one of these things that I'm circling are trades that I would take. I would hop in puts again, probably here, and I probably would have got stopped out. Right? So we broke below this level and then, saw a pretty significant upside. I would definitely get stopped out on this trade. So this would be a failed trade for me, and that's fine. We can't have all winners. And like I said, I'm trying to be as honest as possible. And with being as honest as possible, I would enter puts here and I would be taking profit, somewhere here, because I would be happy with the money I made on this trade. I definitely wouldn't get it. Actually, let me not use a circle. I would probably be taking profits, excuse me, right about there. After I saw the wick on this candle and then we come down and wick back up, I'd be like, no, I'm good. I'm done. I'm going to get out. And I wouldn't end up seeing the full move. And again, same thing. I would hop in puts here. I wouldn't get faked out on this one. And I probably would have got the full move down to the support and resistance level that we, determined previously. Same thing here. I actually took this trade today. I would hop in puts here, play it all the way down to my level here. And we would just do this over and over again. When we come back here, take puts down, and I would exit at my previous value area low. Again here, boom, in, out, in, out, in, out. Done. Day's done. And that's it. And so I don't recommend taking, whatever this is, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades in a day. But if you play, 2 or 3 of these, I mean, honestly, if you play one and you honor your risk to reward, you're probably done trading for the day. If you do 2 or 3 and every single one of them hits from, your entry to your reward, you're crushing. Like, you're absolutely crushing it. And this is how you want to trade. This is this is the super, super important part of this video. Actually, let me just backtrack a second. You want screen time. You want to look at charts. You want to draw lines on charts. Your lines might look different than my lines, but that doesn't matter. My lines are not going to be any more right than yours. We're just seeing different things. This all just comes with experience. There are things that are definitive that are not subjective, which is like the POC, the value area high, the value area low. Things like that, our levels will always be the same. And you can always, sorry, let me just grab some water really quick. My All right, sorry about that. So, again, our levels might not be exactly the same on the chart, and that doesn't matter. You want screen time. You want to draw lines. POCs, value area high, value area low. Those levels will always be the same. Those are not objective. I mean, they're not subjective. They're objective. It's a set level on the chart that, if 10 of us on this live were to draw our value areas high and low and our POCs, they would all show up at the same level, maybe like a few cents off here and there. But, and this actually brings up something. I use 2 points because 2 points lines up with the lines that are on the chart, just so you guys know. But so those levels are set. They're completely objective. There's no subjectivity to them. They don't move. If one person's looking at a chart and somebody else is looking at a chart. Other lines like support and resistance or whatever, like I was drawing, further back for this range that we're trading in, those will move. And it doesn't really matter. Like, close enough is good. You're always gonna have trades where you get in and it ends up wicking back up, wicking past your entry. So like, this is a great example. We're buying on the green candle. We buy right at our level here and it wicks up a little bit past it. No big deal. So having the levels close enough is good enough. And as you get more screen time, you'll just get better and better at finding these levels. And then you just have to have the confidence to play them. You can't be afraid to, buy a put into strength. You can't be afraid to buy a call into weakness. So buying calls on red candles can be a little bit rough when you first start doing it. But once you've done it a few times, you'll be like, wow, I should have been doing this, however long ago, a year ago, 2 years ago, 5 years ago, I don't know. Whatever your trading journey is for you. If you guys do this, like literally, if you make a plan the night before on SPY, like when you start out, I would focus on one chart, set a plan, draw your POCs, draw your VPOCs, draw your value area high, value area low of the previous day. Try your best to find support and resistance, just the lines that I was drawing, not where I'm drawing like a massive box, but just try to find lines where you have a lot of touches, from candles like this, we drew this way back, but if I was drawing a support and resistance here, I would definitely grab these, these wicks and put a line right there where we have it. Plan it out the day before, get all of your levels on your chart. I would recommend not paying attention to discords, not listening to any live streams, not listening to anything where people might fake you out of a trade, because there's nothing worse than there's nothing worse, I'm telling you, than, let me just remove this really quick. There's nothing worse than knowing oh, I need to go long here. And as these red candles are coming down, and also notice, earlier we were talking about volume anomalies. Well, actually, I think this is the same one we were talking about, but we have a volume anomaly here. Price is ripping down and volume is declining. So this is just indicating a reversal here. But there's nothing worse than being oh, I'm going to grab calls at this VPOC, and then somebody in a Discord says, oh, it looks really weak here. And then you second guess yourself and you don't take calls just to miss this move. And then you're kicking yourself in the ass going, I knew that level. I knew I needed to be hopping into calls. Volume was declining. Everything was saying, get into calls. And some dweeb on some Discord said, oh, things look weak. Well, yeah, this does look weak if you're looking at the small picture. But if you have this POC on your chart and you're paying attention to volume, we're declining. This is a killer entry for calls. And like I said, some doofus messed with your mindset and you didn't take the play and you missed this massive move up. And this one here, even though your price, well, actually, sorry, I take it back. I was going to say, even though your price target's here, you probably would have got a much bigger move, but with this wick here, you wouldn't. But you probably would have got a bigger move than, just the price level, because this is a pretty strong candle, a few points above the price target. So I would say cut out all of the noise, cut out the discords, don't listen to anybody. Unless you have a small private group of rock solid traders that you trust that are, on the same level as you, where they're not afraid to hop into a call when you're seeing red candles. That would be the only group I would stay with. And again, this, I'm not trying to take away from Shorty's Discord or whatever, but even myself, I have to cut out that noise. I do pay attention in the Discords, but when somebody's saying go long here, weak here, strong here, calls here, it just goes right over my head. I don't pay attention. I trust my levels. I trust what I'm doing. I play my play. If I get stopped out, it is what it is. You are going to get stopped out of plays. Nobody is going to be 100% correct all the time. So be okay with taking losses. But the key is never take a big loss. So I'll say this, really important. A successful trader will do a few things, 3 things. They'll take a big win, they'll take a small win, and they'll take a small loss. The one thing a successful trader won't do that an unsuccessful trader will do is take a big loss. So if you look at successful traders' logs, they might have, 1 or 2 big losses in comparison with hundreds or even thousands of big wins. But if at all, they're not going to have many. So be okay with having losing trades. Be okay with getting stopped out. But if you're shooting for that 2-to-1 risk to reward, like I said, even if you're a terrible trader and you're only right 50% of the time, you're still going to bank. And the last thing is make sure that you log your trades. It's really important, you know, like at the end of every trading day, to log what you did. That way you can reflect on what worked in the trade. Like, you know, an example would be, okay, I'm going to take calls here. Boom, you take your calls. So then when you log it, you're going to say, I took, you know, I hopped in calls on red candles into the 829 POC. Um, and my price target was the value area high. It got hit and I sold into strength. You know, so like I sold on the green candle. Um, or you know, the inverse would be like, I took a put at the previous day's value area high. Um, it actually ran a little bit, but ended up coming back up and hitting my stop loss, and I got stopped out. You know, whatever, blah blah blah. And technically, you didn't do anything wrong on that trade, but you want to reflect on what you did do correctly, what you did wrong. Um, the things that you did correctly, you want to reflect on so that you can keep doing those things. The things that you did wrong, you want to reflect on so you can stop making those same mistakes. And you also want to reflect on what you could possibly do to improve moving forward. Um, and I think that that does it for this video. If you do this, and again, like for some people, this might be harder. If you're a newer trader, we've talked about a lot of stuff. If you go through my playlist on YouTube, it might help give more clarity, or even watch this video, you know, a few times or whatever. If you don't understand something, Google it. Hopefully I didn't use any terminology that's over people's heads. I try to, you know, keep it as simple as possible so everybody can understand. And when I say that, don't be offended if you didn't understand something. You know, like if you're not like a really good trader, I wouldn't expect you to understand everything I say. And if you're a really good trader, you're probably not in here watching the video. And again, that's not, I'm not trying to like make fun of anybody or anything like that. But my point is if I've said something you don't understand, Google it and try to figure out what it is that you don't understand, or DM me and ask me, or if you're in a shared Discord with me, ask in public. That way other people that might have the same question as you can learn from your question. You know, and just, it's a process. If you are new, those books I recommended, you want to read. I mean, there's several that I recommend, but the top three are going to be Trader Dale's Volume Profile, Volume Price Analysis by Anna Cooling, Secrets of a Pivot Boss. The first few chapters, you want to learn the type of buyers and sellers, and you want to learn the type of trading days. That way you can recognize them early in the day, and then you'll know how to trade that specific day based on what's happening. And that's it. Like, I'll hang out for a second just to see if people have any questions. But other than that, this is done. If you guys are tired and want to cut out, you can. I think I've got some questions in Discords here. I'm trying to look. Oh, okay, that's not a question. Oh, my plan for tomorrow? Yeah, sure. Spy. I know I'm going to have to move some levels, but not very much. Let's see, reset. There. Where in the world? Oh, it's right here. Okay. And then I'm probably going to have to look for some levels down through here because I don't have any right now. So Kayla, I can post my spy chart in the Discord after the video. I don't want to take up more time drawing levels, but this is going to be my plan for tomorrow. Is I'm only going to be shorting, and I'm only going to be, you know, like I'm going to be looking in this range here. If we gap up, I'll be shorting these levels here, but I don't, or I'm sorry. If we bounce, we're not gapping up. We've gapped down. There's no way. I don't think futures will recover overnight. I mean, I guess it is possible, but it's unlikely. But if we start, trending upwards throughout the day, I'm just going to be looking to short the levels that I already have here. I'll be looking at levels down here to short. And like I said, I can post my chart later in the Discord. But yeah, I mean, really, that's it, guys. Like if you follow this to a T, until you become like a pro trader and just make a plan the night before, follow it to a T, you will be successful. Using that 2-to-1 risk to reward, you really can't fail. 50% of the time correct, you're making a lot of money, trust me. And then once you get to the pro level trader, then you can deviate from the plan. Then you can say, hey, like I see a good entry here, I'm going to take it. But until that time, until you're a pro trader, don't deviate from the plan, and you'll start crushing. Don't FOMO, don't chase. If you miss an entry, it is what it is. There's a million more. And like, seriously, if you watch this video however many times it takes to get it into your head and do what we've gone over tonight, you will be successful. This is like, I don't want to say it's easy because it's not easy, but once you figure out how to get the levels onto your chart, following the plan is easy. And that's it. You just follow your plan every day. I might have a couple of questions in DM, so let me just look at those. Oh shoot, I just realized I didn't really go over fixed range volume profile. We'll do that really quickly. So Eaton, they are not the same. Session volume profile is going to be, your volume profile for each day. Whereas sorry, let me go back to ES just because there's less noise on the chart. So for our fixed range volume profile, you want to be looking at a higher time frame. And so like I was saying earlier, you want to grab your low to high. Oh, don't do that. Sorry. Low to high. This will be really fast, guys. And you want to label these as well. So I'm not going to label all of them. Just going to show you how I do it. So cumulative value area high. So I know when I look at this is, from the low to the high. This is my short entry. Like on the bigger picture, this will be my short entry. If price comes up to here, like full port, short right here. And then I'll do cumulative POC, cumulative value area low. And so this volume profile is showing me where buyers are, right? Because we're in an uptrend here. And then you want to do the same for your downtrend. So from high to low. And this will show us where sellers are. All right. So that's that. Let me just see. I think some people said some stuff in Discord again. So, oh, this. Oh no, that's it. That's all the questions, I think. Let me just check YouTube. Yeah, so that's it. No questions. All right, everybody. I'm sorry. This ended up being 2.5 hours. I was trying to cram it into 2 hours, but fixed range, no, you cannot, Rosemary. I really love using TradingView because of the amount of versatility you have with charting. It's worth every single penny. It's basically $15 a month for TradingView. You can use the cheapest plan, and when you buy the cheapest plan, though, you also need to keep in mind that you have to pay for live data. So there's like, depending if you want to watch futures, there's 4 live datas that you need. If you're not interested in watching futures, then there's just 3. You need ARCA, you need NASDAQ, and you need the why can't I think of it? The S&P 500. And then for futures, you need the one called CME. I can probably show you guys. So I'll show you guys. I just want to make sure there's nothing like on this screen I have to worry about sharing on YouTube. Okay. So TradingView, on the website, you go to this mouse wheel is killing, like I'm not even touching it and it's moving. You click on your icon and go to account and billing, and then account and billing here, and oh, this mouse wheel is killing me. I'm gonna break this mouse. So these are the 4 that I pay for: the NASDAQ, NYSE, ARCA, and CME, which is my futures. So those are the 4. Like I said, if you're not interested in futures, you don't need this one, but you definitely want these 3. But like I said, TradingView is worth every penny. And I will just say, if you don't have an account, I would appreciate if you use my referral code. It's not a huge deal, but I would appreciate it. The link will actually be in the description of the video. Any of those links down there in the description will help me out a little bit. And none of them cost you anything. So that's it, guys. I think I might have one more question in a Discord. Oh no. Oh, so Kim, as of right now, I don't trade futures. I'm gonna start trading, and when I do, I'm gonna use Trade-of-8. They have reasonable fees, and you don't need a ton of capital to trade margin on Trade-of-8. So that's probably what I would be looking at. All right. I mean, I don't really think I need to apologize for the length of the video, but I am sorry it did run on pretty long, longer than I anticipated. But I hope that people found value in this. I hope it was a good video. At the end, I feel like I was trying to kind of cram stuff in, but like I said, if there's anything that I didn't cover that you have a question on, hit me up in a Discord, DM me, message me on Twitter, or even just ask in the chat in this video, and I'll reply to you. So yeah, anyway, that's it, everybody. Much love. Thanks for showing up. I know it's a super long video, and the people that started at the beginning and made it all the way to the end, you're the real ones. Anyway, much love. Take care. Good luck
Hey,
tomorrow.
Rockets.
Yeah, what's up?
Rockets.
Yep.
Um,
Dude, I'm on my outro, and this dude's like, "Hey, yeah, go
oh,
Angel." I'm messing with you, bro.
am I blasting you?
No. I'm playing, brother. Go ahead. What's up?
Oh, hey, on the trading view,
Mhm.
they canceled the account because I didn't have $20 in there, and I
Okay.
had to redo it.
hmm
So do I need to get with sequence because I don't have of any of the indicators?
Yeah, you do.
Okay, okay,
Yep.
yeah, it's. I just renewed it, and it's pretty much all messed up, man. I may have to have you help me with that later on.
Yeah. Well, you're gonna have to get with sequence to get the indicators.
Okay,
All right.
okay, buddy. Thank you, and thanks for everything, bro.
Oh, no problem, brother.
Have a good night.
You too. Get some rest.
Yes, sir.
All right. Later. All right,
Bye.
everybody. Again, much love. Thanks for showing up. Hopefully, it was a helpful video. I had fun teaching it. I
Awesome.
I can't wait. I've already noticed in some of the discords like more and more people talking about volume profile, value area high, value area low, POCs, whatever, blah 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 blah. I love to see it. Just keep crushing, guys. Keep grinding. Read those 3 books, um, and all of this stuff. The puzzle will start to come together. All right. Much love. Take care. Like I said, hit me up with questions if you have any. Peace. Bye.
Take care, buddy.